Let's pick up on the markets now. The local index, the Rand, set for a muted trade today. The JSE closed weaker on Monday, along with its global peers, as investors looked ahead to the United States Federal Reserve Chair, that's Jerome Powell's, the testimony this week for clues on the monetary policy outlook. Well, the head of equity research at FNB Wealth and Investments is Chantal Marx, and she joins us now for a quick markets analysis. Chantal, good morning to you. Good to have you. Let's begin with that quick overview of how the markets are faring in early trade.
So in early trade, the market has opened in negative territory. This is following on from global markets generally that have been under pressure overnight and this morning. China cut its reserve or cut some of its lending rates this morning, but it failed to impress the market. So we still have a generally negative sentiment around Chinese economic growth to contend with, as well as concerns that the rest of the world is also going to struggle for any meaningful sort of momentum this year.
Let's then talk commodities. Oil prices slipping this morning after China cut the benchmark lending rates by less than some people expected, sowing that further concern over the oil demand outlook in the world's largest crude oil importer. What's going on there, Chantal?
So this ties into what we're seeing in equity markets this morning. The concern is that China is not going to grow as fast as what the world would like it to grow, because what we're contending with at the moment is a global economy that is quite soft. We've got a possible recession coming in the US and in Europe this year. And China opened in January, and the expectation was that it was going to prop up economic growth. Now, high economic growth means more demand for commodities, including oil, particularly oil, because China is a net importer. And obviously, if there is some concern around that growth trajectory, the oil price and other commodity prices also comes under pressure.
Let's talk company news. Standard Bank publishing a voluntary trading update to the 31st of May 2023, including a trading statement for the 6 months which ended on the 30th of June 2023. Talk us through their numbers.
So Standard Bank put out a pretty solid update this morning. They said that expenses are rising a little bit faster than expected, but that revenue is more than making up for that because interest rates are higher than what they thought it was going to be. They also saw other income performing quite well throughout the period. They flagged that their bad debts have increased, and they're probably going to increase the coverage on that. And their credit loss ratio is going to be quite high. This is something that we've seen from most of the South African banks that have reported so far this year. And it's a function of high inflation and high interest rates. So nothing unexpected there, nothing to be overly concerned about there. They did say that their earnings per share is going to increase by more than 20%, which is what the market is expecting. We won't expect massive changes to estimates on the back of this, but I think that the update will provide some comfort to investors, and that's why you're seeing the share price in the black today.
Let's conclude with Afrimat and its shareholders, which plan to acquire Lafarge South Africa. Help us make sense of the specs of this deal.
Yes, it's quite a large deal for Afrimat. It's a Category 2 transaction, so that means that it's big, but they don't need shareholder approval for it. In total, it's going to be about R1 billion. That's relative to a market cap of about 9 billion rand. So, if you look at that proportion, it is quite large for them. And this business fits in very nicely with Afrimat's existing materials business, which has really stagnated over the last few years because we've seen construction activity, particularly on a large scale, remain quite muted. But this will help them add market share to their business. And that scale, I think, will be positive for that specific part of their business's operating margins. So overall, it makes sense to us at first glance. We'll still have to dig a little bit deeper. They're going to take on a little bit of debt, but it shouldn't strain their balance sheet too much.
Chantal Marx, thank you very much. Quick analysis of the markets and how they're faring in early trade. She is head of equity research at FNB Wealth and Investments.